Hello and welcome to my channel. My name is Jess and this is Crypto Trading. I am on a quest to find the perfect trading strategy. So on this channel I will be exploring trading strategies used in the traditional financial markets and apply them in the crypto markets. Let's go. In today's video, I thought I'd start off with backtesting the good old 20 and 50 exponential moving average crossover strategy. This seems to be one of the most basic and fundamental trading strategies out there. I've seen a lot of videos about this strategy, and one such video is from Trade Pro. Shout out to Trade Pro on YouTube. So when he did this strategy, he tested it at a 1-to-1 risk to reward ratio. And he was doing what I've seen a lot of YouTubers doing when they backtest a particular strategy. They simply start from today's date and look for the signal and count every signal as a trading opportunity. Well, that may work in some of the traditional markets that have trading hours around 9 to 5 Monday through Friday, but this is crypto. It's a 24/7, 365 game. And so it doesn't matter if a particular strategy is successful or not if all the trading signals are happening while you're sleeping. So what I like to do is mark up my chart, sectioning off the actual trading hours that I'm available for. So what I do is go and put vertical lines in my chart starting at 5 a.m. and 5 p.m. I give myself a 12-hour trading window because I know that if I'm trading Monday through Friday, I'm going to be home during those hours and I will execute on a trade between those hours. But of course, you're going to have to choose whatever trading hours work for you in your schedule. So if you want to section off your trading hours, what you're going to do is go to tradingview.com, open an account. You get 3 free indicators on tradingview.com. Tradingview.com is the only place I use for charting. So when you have your chart up, I just used BTC USD Coinbase right now. And again, to put these vertical lines, you just click here and press vertical lines. Figure out what trading hours you're going to be available for. And of course, make sure you have the right time zone marked here. I here have the West Coast, also known as the best coast, chosen. So as I'm going along marking up my trading hours, I'll also need to take note of whether it's what day of the week it is. So I'll look on a calendar and see if it's Monday through Friday. And I went ahead and chose a 12-hour trading window, also because I know this particular strategy only gives me a signal at most once a day. So I wanted to give myself a big trading window. If I was trading on the 5-minute, 15-minute time frame, I wouldn't, maybe I would only give myself an 8-hour window. So as I'm going along, manually putting these vertical lines, I don't know of a faster process. If anyone else knows of a faster process in order to section off specific trading times, let me know in the comments below. Okay, so let's talk about the rules for this strategy. Okay, the signal for entering a long is after the 20 EMA crosses over and above the 50 EMA, and then after the pullback and it touches the 20 EMA. So right here we have the 20 EMA in purple and the 50 EMA in blue. And to enter a short, we wait for price action to fall, the 20 EMA to cross below and under the 50 EMA, and then after the pullback to the 20 EMA at least, and close of the candle. So you would enter a short right here. Now to set the stop loss target, what you're going to do is, let's say we're shorting here. We entered here. You actually set the take profit level to whatever the highest, the nearest highest point was right before the pullback, or the swing low or swing high, also known as. I'm going to go to this right outside this candle body because this one's 3% is a little high. So I'm going to choose right here around 233, and then mirror that on the other side. 233 will be our stop loss. And then take profit, I just double it. So it's a 2-to-1 risk to reward ratio. So we pull this down until this metal box says 2. That's a 2-to-1. So I'm risking 2.33% of my account in hopes to gain 4.66%. Here's a profitable long. So we have price action going up, the 20 EMA in purple crossing above, and the 50 EMA in blue. Crosses here and pullback is here. So we go for a long at the start of this candle. To set the stop loss, we're going to take profit level to wherever was the nearest high before the pullback or the swing high. So 2.29%. I'm just going to mirror that down here. 229. And then the take profit will be double that. As you can see from these monster candles, that was going to be hit immediately. All right, so before we get started, if you're going to do this back testing yourself and you don't know how to set it up, the indicators are right here. You'd click this button, type in exponential, EXPO, it already came up. Click that twice, exponential moving average. Get out of there, click on the settings, and then you can change the color of the line and the length, so either 20 or 50. So for 20, I just like to have it a nice purple color, and for the 50, I always seem to like blue is always for 50 for me, and the 200 is always seems to be yellow for me. And over here is the button for your longs and shorts. You can click that and then just click where you're going to enter and move these up and down to figure out your risk to reward ratio. We do need to keep in mind that I'm only testing this on Bitcoin and only during this most recent, monster bull market that we're in right now. So this strategy may work completely different in a bear market and completely different in another coin or in other markets. So for my own personal satisfaction, I'm just marking every trade signal, and then at the end I'm going to go back and actually see if that signal happened during my trading window hours. Okay, so here are the results. I first back tested this strategy 100 times, starting from July 2020 until I hit 100 trades, and not taking into account the time of day or the day of the week. So essentially, if a bot was executing these trades for me, I would have won 47% of the time, and using a 2-to-1 risk to reward ratio, I would have gained 68% on my account over the course of 11 months. But I'm not using bots to trade yet, so I went ahead and excluded every trade that was not within my trading hours of 5 a.m. to 5 p.m. And it only yielded 37 trades and a gain on the account of 12%. So this is why when you're back testing, always take into account the time of day and the day of the week, whatever your trading hours are, because that's going to affect your results. So not the worst strategy in the world, but definitely should not be used solely on its own. With the addition of at least one oscillator and trading strictly with the trend, I think that would weed out a lot of the losing trades. Not financial advice, of course, as I am not a financial advisor, and any information presented in this video is for entertainment purposes only. Well, there you have it. Thank you so much for watching till the end. If you can do me a huge favor and subscribe to this channel and help me grow it from this little baby channel into a huge baby channel. Thank you so much. I'll see you next time.